Hello, everybody. I'm David Asman. Welcome to Scoreboard. First up tonight, tensions are high after a record-setting day on Wall Street. The price of oil hits an intraday high of $100 a barrel for the first time before finishing at $99.62. Meanwhile, the Dow takes a dive, plummeting 221 points. That's the worst drop on the first day of the year ever. So is it time for you to bury your money in the backyard or your mattress and head to the bunker? Joining us, Rayola Dewar. She is American Petroleum Institute senior market analyst, smart money columnist, and author Jack Howe. Aileron Trading VP. There's Aileron Trading VP and senior market analyst Phil Flynn. That's actually Peter Schiff, author of Crash Proof. We'll get it all straight, believe me, folks, before this segment is through. Rayola, first to you. What's going to happen to oil tomorrow?
Oh, gosh, if I knew that, I'd be the richest woman on earth. I think we're all looking at the inventories and waiting to see how they come in tomorrow. The Department of Energy will have new data, and so will the American Petroleum Institute. And inventories have been declining over the past several weeks, so I think everybody's waiting to see what's going to happen.
Well, Rayola, let me stay with you for a second. Inventories, political unrest in places like Pakistan, Algeria, which is a member of OPEC. What weighed the most on oil today?
Well, I think yesterday's violence in Nigeria certainly had an impact on the prices today, and it's just a lot of strong demand out there and supplies that are struggling to keep pace with that demand, and that added violence just, I think, helped to tip the balance today. Well,
Jack Howe, we saw the Dow go down a lot. Now, it was already going down because of these manufacturing figures. It showed a slowdown in manufacturing and a slight up creep in inflation. Which played more heavily in that 221-point drop?
Probably a slowdown, but really everybody knows this economy is going to slow. Tomorrow morning, I promise you, the sun is still going to come up. Stocks are still going to be a great deal. What's going to happen?
But will the market be up tomorrow?
Well, any one day, I don't know. But right now, stocks are no more expensive than they have been historically, right about at their historical price-earnings ratio. And there's plenty of bargains out there. And if you look at these things like expensive oil, these things are going to fix several problems that have been hanging over our heads for decades now. We use too much of this stuff. When it gets expensive, we use less, and that's going to happen.
Well, Phil, I put together a chart, which I know you're familiar with, but there were some surprises in there for me. The January figures of the price of oil for the past 5 years or so, starting with January 2004. Do you remember what it was in January 2004? I want to put you on the spot.
Let's go back. No, that's okay. Let's see. All right. We're putting on about $10 a year. Go back 3 years. Take off the $30, somewhere around $40.
Well, you're right going back 3 years, but I'm talking about 2004 January. It was $28 for a barrel. January 2005, it was $35. January 2006, $55. January 2007 actually went down a little bit to $54.63, and now we go up to $99.63, almost $100. One of the biggest jumps ever. Why?
It's a mania. That's why, because everybody is buying oil, but mainly because of the dollar falling as much as it has this year. I think what would be even more interesting to put up a chart of the all-time highs that we've seen since 2003. Roughly, going back the last few years, you're adding to the highs of oil roughly about $10 a year. Well, this year, from last year's high, near $78, now we've added close to $20, almost $30 a barrel. And if you look at where this oil really started to take off, it goes directly back to when the Fed cut interest rates by 50 basis points. That's why we've seen at least $10 a barrel.
And Peter Schiff, Phil just said something that was music to your ears. It's all about the dollar. It's about the dollar going down. That's why the price of oil is going up. I guess you agree with that.
Yeah, well, it's not just the dollar that's going down. The euro is going down. The yen is going down. All currencies are falling, priced in gold and priced in oil. It's inflation. There is no mania in oil. Oil prices are reflecting the higher inflation that we're creating. And prices are going to keep rising because the central banks around the world, particularly in the United States, are going to keep creating inflation. Now, I also think today's decline in the market was much more a function of the weak economic data. A lot of people have bought into this myth that exports are going to save the day in America. And I think today's numbers, a 5-year low in manufacturing, shows that we cannot rely on exports because we're not manufacturing enough stuff to do export. So our economy is going to collapse.
Peter, the higher energy prices probably played into that weak manufacturing number. The prices are going up.
Well, sure,
it's going to be harder for them to make a buck. And that's going to lower oil prices in the long run, is it not?
No, we're not going to get low oil price. We're going to get higher oil prices. They're going to keep rising.
Forever.
No,
forever.
Look, oil prices in the 1970s, oil went from $3 a barrel to $30 a barrel. It never went down to $3 a barrel again. We debased our currency in the 70s. We're debasing it now.
Well,
and what's going to happen?
Hold on a second, Peter. Rayola, there have been times, as I mentioned before, when the price of oil has gone down, sometimes significantly. And there are a lot of traders who are a lot smarter than I am about these things, people like Fidel Gate and others who say that once it settles around 100, 105, then suddenly demand is going to lower and we're going to have a glut and the price might come down into the 70s. Do you agree?
Well, there are some that are saying that. I've even seen some forecasts for $40 a barrel crude, but they're in the minority right now.
But what about 70 or 80? 40 might be pie in the sky.
But bubbles.
What about 70 or 80?
And that seems possible to me. It really does. But you know, I'm not going to second guess these traders because they often surprise me.
David, imagine what's going to happen in China. Right now, I think energy consumption in China is 1/10 of what it is per capita in Mexico. Once the Chinese monetary authorities allow their currency, the yuan, to rise, and it's going to rise substantially, the demand for oil out of China is just going to explode. And prices are going to go up because oil is going to get cheaper for them. As their currency goes up and our currency goes down, oil gets cheaper for the Chinese.
Jack, do you agree with that?
I don't know if I should hide under the desk right now or what. No,
it makes you wonder about whether you should be stuffing your mattress with cash
I agree with
or euros.
I agree with one thing, and that is we have a Federal Reserve right now that is unnecessarily cutting interest rates. They're watching asset prices, and they shouldn't. Their job is to watch two things and two things only. That's unemployment and inflation, and right now inflation is the bigger threat. But I see no danger of an economic collapse in America. Shares are a great deal today. I don't see.
However, I got to say one thing, Peter. One thing I tend to agree with you on is that if a country that tries to rely, and I'll throw this back to Jack, a country that tries to rely on exports as its means of growth usually doesn't make it. You can't be, unless you are an underdeveloped country that's used to throwing out a lot of exports, like China. Let's face it, it's still an underdeveloped country. If we try to survive as an exporter, we won't make it.
Well, we have to produce.
Hold on a second. That's to Jack. Go ahead.
You know, I think that, you know, today's numbers did not reflect this, but I think that you can see a lift in coming years from exports. I mean, when the dollar's cheap, that stands to reason. But, you know, America is a country that has a tremendous consumer base.
Right.
There's plenty of money to be made here with or without exports, but I think you will see the exports help.
Go ahead.
That's the problem, that we have a consumer-based economy that's unsustainable. Like, you know, we had a dot-com bubble, we had a housing bubble. Our entire U.S. economy is a giant bubble because you can't have a consumer-based economy.
Peter, you jumped in, but go ahead, Phil.
I mean, you know, it's amazing what I'm hearing here. You know, a few months ago, or about a year ago, we were worried about outsourcing all our jobs because of the strong dollar. You know, now the dollar's weak, we'll start insourcing jobs. And, you know, I mean, a lot of these manufacturing jobs that we've lost should come back to the U.S. if the dollar is weak. Listen, this is a normal pattern of the dollar. We went to an all-time high. We're going to be testing an all-time low for a while, and I think we're going to rebound into 2008.
No, we're going to sink into an abyss.
Rayola, there has been some question about whether the oil sheiks are going to want to change the currency that they're paid in. They're being paid in dollars, which keep, as Peter mentions, keep getting cheaper and cheaper in value. Are they going to switch to wanting to be paid in euros or gold?
Well, I really don't know what they're going to do in that regard. I really can't say. But it is certainly a factor, and they're certainly keeping a close eye on that.
Phil, have you heard anything about that? That they might, the sheiks might want to change what they're being paid in?
I've heard that the Iranians are already wanting to be paid in euros, and you know Venezuela was also talking about it. So why not pay them in bolivars?
Well, so look, Kuwait
you know?
recently delinked their currency from the dollar. You know, all these OPEC countries have peg currencies, and they're all these pegs are going to go.
Right.
We're creating inflation in these countries. We're exporting our inflation.
Very quickly, I just need a one-word answer from each one of you. Peter, starting with you, a year from now, will oil be higher or lower?
Higher.
What do you say, Jack?
The same.
The same. Phil, what do you say?
I'm leaning towards the same, or even maybe a little lower.
Rayola?
I'm not making any forecasts.
Okay, we end up with the smartest of the bunch. Thank you very much,
no matter
folks.
what you say.
I gotta thank you. We got.